Hey everyone, Mark here at TapeTally.com for Week 27 recap. Both the US and Canadian markets had a short, light volume trading week this week on the backs of some holidays. Canada Day on Monday, and on Wednesday it was Independence Day in the US. So, as you can see here, S&P 500 and the Nasdaq were down. Russell 2000 was up over 1%. We'll talk about that one. That's actually a good indication that possibly some risk is coming back into the market, which may indicate that we move higher from here, but this could just be an anomaly as well. But Dow Jones was the biggest loser on the U.S. markets. Gold was down, oil was down, volatility was also down, which is also it was down, over 6% when the market was down slightly. So volatility is coming out of the market even though it was down, which is a good indication that we may also move higher here. The Canadian markets were up slightly on the week, which is a bit surprising, basically because it's a resource-driven stock exchange, and both gold and oil were down. And we'll talk about maybe why, we can maybe buy some of Canada here, even though I'm maintaining my weekly ratings on it. This is more of a longer term viewpoint on everything, but yeah, we'll talk about that a little bit different. So the SPY here, we're still stuck in this range, neutral. As we talked about last week, we can start maybe drawing this channel here, which is a little bit less inclined as this one. And so we're stuck in the middle of the range. Nothing more to write about this. Basically it was a light trading week. We kind of expected a pullback after last week's kind of surprise from Thursday afternoon into Friday, that large gap. And yeah, so for this one, maintain a neutral rating. The Qs, same kind of deal, stuck in this channel here. IWM, we are also consolidating here. They had an up week. Gold is consolidating after it broke its long-term trend line here, so still bearish on that one. Oil didn't really move too much. I think it was actually down this week, like we said. So, I mean, it is looking quite bearish long-term. However, we are, it looks like it may bounce off of this line here. So that's a possibility here that it could bounce and at least go back up to this trend line right here, this downward sloping one. I'll skip over volatility because it's tough to see anything here. And the Canadian markets here, as we talked about, I believe it was last week. Yes, I'm bearish on this market overall. However, if you take a look when we talked about support and resistance, this market has bounced a number of times off of this blue support line here. And it looks like it may bounce here again, even though it's coming, I probably expect it to come back up to the $29 area, but we could play it for a bounce here. That would not be out of the question. So, although I do say here, yes, I'm bearish on the market, I may be willing to put on a short-term trade to the upside for this market at some point. Go back to the SPY here and drill down to a shorter term time frame, the daily here. And what we are seeing that the market is putting in these higher lows and higher highs for the time being right here. So I mean, we talked about the resistance coming into effect at some point right here to take out these old highs. So I think that there will be quite a bit of range action, especially throughout the summer months. Typically the summer months are quite light volume because large institutional players and the large traders are kind of out of the markets. They're in their beach houses there in the Hamptons or whatever. So I think we remain in a range for the time being, at least until after the summer months are done, and we'll see how it goes in the fall here. So one thing I wanted to talk about this week is how I start to get more aggressive in the market. I never really go all in on any positions or anything like that. what I start doing is, I will buy some positions. For example, there was one that I bought recently. Yes, this one, LF, Leapfrog Enterprises. As you can see here, this is a pretty textbook. I like buying stocks hitting all-time highs. So, this was a textbook ascending triangle breakout here to all-time highs. That's almost a 10 out of 10 setup there on high volume. So, I purchased that setup. There was, I think, a couple other ones that I did, and if those positions start to work out and I start noticing that the breakouts are starting to stick, then I will start legging into more positions and getting more and more aggressive as my positions prove to me that these strategies are working again, and that I'm trading well. If I start noticing once again that if these breakouts start failing, and I'm losing small amounts of money on them, then I will stop until the cycle repeats itself again. So that's that's how you get aggressive. When these start to work, you want to start piling into that, because there's only maybe 2 or 3 times during a year that the markets are really conducive to aggressive trading, and you need to take advantage of those. So you need to be paying attention to the markets at all time, but at the same time being patient for those opportunities to present themselves. So that's it for this week. Have a great week. Expect more low volume till the end of the summer, and trade well.